Hey everyone, Pinduoduo updated investors with their quarterly financial results, and yet again, the company delivered phenomenal growth on the top and bottom line. I'll go over their latest financial results. I will also update investors on my buy recommendation for Pinduoduo stock. I'll let you know if the stock is a buy, hold, or a sell at current valuations by looking at the company's latest quarterly results, looking at its longer term results in terms of revenue and profitability, comparing it against its valuation and the longer term strategic competitive position, and answer whether or not I think it makes an excellent investment today. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Pinduoduo reporting first quarter 2024 highlights. Total revenue in the quarter increased a whopping 131%, and operating profit jumped by 275%. Revenue came in at $12 billion US and operating profit of $3.6 billion US, both increases of 131% and 275% respectively. The company is home to widely popular Temu, which is gaining traction worldwide. The company's website offers products that are cheaper than you can find almost anywhere else. That low-cost value proposition is gaining popular adoption along with the company's aggressive spending on advertising. Meta Platforms highlighted how Temu was one of the fastest growing advertisers on its platform. It understands that consumers would love their value they offer, and so they're spending money to get the word out, and it's working. Consumers look at the site, they compare prices, and they say, man, things are much cheaper here on this website than they are anywhere else. Especially noticeable is if you compare prices on Temu with prices on Amazon. You'll find many items are a fraction of the price on Temu compared to the price on Amazon. The big difference, of course, is when you order from Temu, it takes much longer to receive your items compared to when you order from Amazon. If you're a Prime member, you could be getting your items on the next day or the day after, whereas on Temu, it could take a week, sometimes 2 weeks. I haven't really calculated how long it takes me to get items from Temu, but I typically order items from Temu that I don't mind waiting to receive. Things like coffee filters, replacement remote controls for my TVs, replacement replica Apple pencils, things of that nature. They're all a fraction of the price that I find on Amazon. Now, those types of items, when I know I'm not going to need them for a while longer, I don't mind waiting and paying half or even a third of the price that I would pay on Amazon. And I think many consumers are choosing that same choice, right? They're saying, man, this is just so much better value. I don't mind waiting a little bit longer if I'm going to get such a better price. And so they're gaining traction worldwide. Of course, there are risks, right, which I'll talk about a little bit later. Now, the CEO or co-CEO saying that they're committed to offering a trustworthy shopping environment for our users around the world. And one way they're helping gain trustworthiness is through the return program. I've had to initiate a return several times on the Temu app for items that came broken, and it was very quick, and I didn't even have to return the item. It was items that were, I don't know, $5 or $3, and they came broken, and I went on the app and I just said it was broken, and they instantly refunded me the purchase price. I didn't have to return the item. And in that way, they're gaining trust from consumers who feel that, okay, maybe they're not as trusted as Amazon, but the more they go through experiences of that nature where they get their refund easily, the more they'll grow to trust Temu when they have further shopping needs. The flip side of that is that it's expensive to just allow consumers to return items without actually returning the item and getting a refund. consumers will start to learn that they don't have to return the item, and they'll fraudulently tell Temu that this item was broken or damaged or whatever the case, just to get the refund. So I'm not I wouldn't be surprised if management knows that, but they're just letting people get away with it for now. And then when they gain more adoption, they'll slowly start to get stricter in terms of their return policy. Right now, they just want to gain traction with consumers, and that's one way they're gaining trust. So the other co-CEO highlighted that this year is critical to deepen the execution of their development strategy. And the VP of Finance said that rather than focusing on short-term results, we prioritize long-term value creation and remain committed to further deepening our investments in value. And that strategy I highlighted is one way they're doing that, by making that return process seamless and easy for customers. They're adding long-term value because they're gaining the trust of those consumers, even though they may experience some fraudulent return activity. That still deepens the trust with consumers. That's where their way of spending money on trust. They say, okay, maybe some people are going to take advantage of that policy, and we're going to have to spend, $4, $8 multiple times with millions of consumers, but it's like spending money on gaining customer trust, and they're okay with that right now as they're deepening their customer value. So cash flow from operations was also solid. It increased year over year. Actually, cash flow from operations decreased, I should say, year over year to RMB 21,067 million compared with 1.338 million in the same quarter last year, mainly due to the increase in net income. I'm sorry, they did increase cash flow from operations. The comparison between RMB and US dollars threw me off there. Looking longer term, Pinduoduo's revenue has grown exponentially up to 34.82 billion, up from relatively lower levels around 5 billion in 2020. That growth in revenue has led to increasing operating profit margin, as you see in the orange here, up to 23.67%, up from around negative 25% in 2020. So demonstrating economies in scale as their revenue has grown. They've used that growth in revenue to generate better profit margins by controlling costs and letting revenue and costs create a separation, which leaves greater profit on the bottom line. Now, in terms of the stock price, it's trading at a forward price to earnings of 13, which incorporates many of the risks associated with Pinduoduo stock. Like I mentioned in the beginning of the video, I would talk a little more on risks. A stock with the performance of Pinduoduo, with revenue growing by triple digits and operating profit growing by over 200%, if this was a US-based stock, it would be trading at a forward price to earnings ratio closer to 40, in my opinion. So roughly 3 times the valuation it's currently trading at. But because it's a Chinese-based company and because there are risks associated with its business model, for instance, it's getting away with not paying certain customs and taxes because of the items it's transferring are less than $800 in value. The US is targeting Pinduoduo's Temu for potential increased regulations, increased regulatory pressure, making it difficult for the company to continue operating this lower cost model, because if it's going to have to pay higher duties and higher taxes, then it will not be able to offer as low of prices to customers, which will then make it less attractive for customers, and it could lose a big part of its customer value proposition. So those risks are the reason why Pinduoduo stock is trading at this valuation and not a forward price to earnings of 40. So investors that are saying, well, this company is risky because it's a Chinese-based company and because the business model may not be sustainable, you would be right, but you also should consider that much of those risks are not secret and the market knows about them, and they've incorporated that into the valuation. It's trading at a forward PE of 13, even though it's growing at triple digits on the top and bottom line. You won't find this kind of opportunity in a US stock. So it's incorporating that. So given all of that and weighing its risks versus reward and looking at the longer term aspects of the company, I would say the stock is a buy here. I would also note, just like I just talked about, it's a higher than usual risk stock because of those factors I mentioned earlier. So this isn't for investors that are risk averse. This is for investors that don't mind taking extra risk for the potential of higher returns. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.